Welcome to my $100,000 stock experiment, year 2, week 43, ending February 7, 2020. This isn't an endorsement to purchase any stocks that I've bought, nor an endorsement to purchase stocks in general. I'm on a mission to become a great growth stock investor. Watch me on my journey, learn from my mistakes, and celebrate my successes. The S&P 500 index had a really good week. It hit a new high on Thursday. Last Friday, it closed near its 50-day line, and I thought that it was going to continue dropping, but it bounced back, and now it closed above its 8-day simple moving average. It was up 3.17% for the week. I'm not crazy about the price action in this chart right now. I would like to see it hold above 33.45, which is basically the high that it hit on Thursday. The Russell 2000 was up 2.6% for the week, which is nice, but it's still in what I consider that danger zone. It was in that or below it for most of the week. Last week it closed at 1614, and this week it closed at 1656. The volatility index is still flirting with the 16 line. I like to see it hold below 16 for at least a week. I like it to have short bars like it did back at number 1. Last week's close was at 1884, and this week's close was at 1547. Looking at the market is one thing, but it really matters how your individual stocks are performing. As you know, I sold off almost all my holdings last week and ended that week with only Bill and GPN. Let's take a look at how Bill did during the week. I wanted to show you the stock charts for Bill.com as it unfolds during the week. On Friday 131, I had a total gain of 20% going into this stock, and I had held it my B1 position for 2.5 weeks. On Monday at number 1, it went up 2% after being up 6% on Friday. The tick marks on that green line next to the number 1, the one on the bottom on the left-hand side, that shows the opening price, and on the right-hand side where the black dot is, that shows the closing price. Number 2, that dotted yellow line, that is showing you where my floor is at, 44.50. If I exit at that point, it would give me a 6% gain on my B1, which isn't great considering I left Friday at 20% up. The orange dot at number 3 is where I was considering moving my floor to, and that one is 1% below the low of the gap up day at number 4. And if I exited there, it would give me a 10% gain on my B1. Now we're on to Tuesday, showing you at number 1. The stock also closed towards the top of the range on Tuesday as it did on Monday. That I consider strong action. We're still showing Tuesday for Bill. I wanted to show you the typical price swings for this stock, just how it normally acts. So it typically has a 3% price swing or a 6% price swing. And you can see a bunch of short bars, which I'm showing with that number 3, and then a bunch of long bars that I'm showing with number 6. Here's Wednesday. We had a huge price swing, a 12% range. You can see this red bar is longer than any other bar that you can see. It's the biggest drop of the year, and it's in increased volume. Down at the bottom, you can see that volume section. It closed 6% down. Thursday, it fell again on above average volume, and it had a price swing of 8%. It closed 2% down from the day before. It also closed in the middle of the range for the day, not down at the bottom. Had it closed down at the bottom for these 2 down days, I probably would have sold it. Earnings are coming up after the market closes. So I took a look at this chart after the market closed, and it did show that it went up about 7% and showed the price around $52. But this after hours action doesn't always reflect in the opening price the next day. But this stock gained traction in pre-market trading and opened up at 56.88. It closed up 15% for the day, and it had about a 10% swing. It's also the largest volume since the IPO day. So the question now is, where do I put my floor? I'll show you that when I review my other stock charts. Last week's plan identified GPN as a likely sell, but I did not sell it. I was waiting for the market to show signs of recovery before I made some buys, and I thought Monday and Tuesday I had strong action, so I did get back into some stocks on Wednesday. AMD and FICO I had sold when I cleared out this account, and Apple I had held recently in my husband's account but got out of it also. Netflix is a new purchase. I have held it before, but not recently. So here's my current holding bar chart. You can see how well Bill is doing in the blue, and GPN not going up super strong, but I've held it for a long time. It's my longest holding. And then my 4 new purchases are all down. I take a look at the individual stock charts each week, and I rank them in the order of weakest to strongest. This isn't necessarily the dollar value, it's the action of the chart itself. AMD I considered my weakest stock, followed by GPN, and my 2 strongest ones are Netflix and Bill. Here's the weakest stock, AMD. So I had owned this previously. The yellow dot shows where I got out of it when I sold it on the 29th. It did trigger a floor and kicked me out. Number 1 is showing where I bought it back, that little intersection of the orange box and the green line. Number 2 is showing my previous buys, my B1 and my B2 there, and then number 3 was my B3. So I've held this stock just for 3 days and it's down 0.1%. And I did rank it as weak because the 8-day simple moving average is below the 16-day simple moving average. GPN. This stock did have a big price swing on Wednesday. It had hit a new high and then it retreated. Earnings are coming up Wednesday before the market opens. And I thought that this price had held up well in the volatile market. So it's still above its 8-day and 16-day simple moving averages. It looks like it's trying to make a move to me. I've held it for almost 12 weeks and it's up 11%. Apple. I had held this stock previously in my husband's account. I exited on 130 when I sold everything else. I got back in right above number 1 where that orange box and the green line intersect. I got back in just slightly above where I got out of it before, less than $1.50 difference on a $300 stock. And then at number 2, 3, 4, and 5 shows where I had gotten into it in my husband's account, but I don't have it there anymore. For this portfolio, I've held it for 3 days now and it's down 0.8%. Fair Isaacs Inc., stock symbol FICO. I did lose a little ground on this one. I sold it where that red dotted line is on January 30th when I sold most of my other stocks. And I did buy it back at that green line and that intersection of the orange box right above where that 1 is. So I did pay more when I bought it back than what I sold it for. I did have purchases in this in my husband's 401k at 2 and 3 and my purchase at number 4. Those are all gone now and I just have that one at number 1. I did leave my floor at 8% on this one. I've held it for 3 days and it's down 0.6%. Netflix. This is a new purchase for me. It did show on the weekly Market Smith chart that it was near a pivot. It has a composite rating of 82 and a relative strength of 97. I'm hoping the stock is immune to the coronavirus. I've held it for 3 days and it's down 1.1%. I still ranked it as one of the stronger stocks because it's well above its 8-day simple moving average. And even though it did have some down days there, it is holding that price line. Bill.com. I struggled with where to put the floor on it and I settled putting it at 1% below the low of the gap up day. My other option was that 8-day simple moving average, the pink, but I thought that was too low. I have 2 buys in this. One I've held for 3.5 weeks and it's up almost 33%. And the other one I've held for 1.5 weeks and it's up 14%. The benchmark shows that after 1 year and 43 weeks, that my $100,000 has turned into $150,224 versus $125,276 for the S&P 500. I lost a little bit of money in my new purchases this week, a total of $269, but I had a nice gain from my existing holdings, $2,275, plus I got a dividend from a stock that I sold, CMRE. The top of this chart shows my current dollar gain sorted by the lowest gain up to the tallest gain, and it is showing for Bill down at the bottom, 4,135. That's in my profit in my B1 and my B2. Everything else I just have a B1, and you can see Netflix is the one that I have the largest loss in, $112. Down at the bottom, the weekly change, the S&P 500 was up 3.17% this week, so all of my stocks except Bill.com did not keep up with the S&P 500. Here's the weekly change and year-to-date change for the S&P 500 over on the left-hand side, and the Melissa Method experiment on the right-hand side. Down in the yellow, on February 7th, the S&P for the week had a 3.17% change versus the Melissa Method, a gain of 1.42%. And the year-to-date is in the purple. So for the S&P 500, it's up 3% for year-to-date versus the Melissa Method up 1.36%. So it's beaten me for now, but I'm going to come back. I think I did pretty well last week considering that most of my money was in cash. I ended the week with just slightly over 50% in cash. This is showing the industry breakdown where I have 2 buys in Bill plus another software stock, followed by finance, chips, telecom, and leisure. So my weekly plan is likely selling anything that triggers a floor, and I'm going to evaluate GPN after earnings. As far as buys, I'm not too excited about any stock right now, so I'll be looking at charts every day, and hopefully one of them will scream at me, buy me, buy me. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel, The Melissa Method. Don't forget to hit the bell if you want an alert when I post a new episode.